This is Market Moves coming at you. I think we all know what happened today. Aurora Cannabis just reported earnings, and I'm going to tell you what they were, if they were good, if they were bad, how you should react to them. Stay tuned. Here it is, the moment of truth. Aurora Cannabis's Q2 financial statements. The last 3 months, this is going to contain everything that happened with this company, from sales to investments to acquisitions, everything. We're going to be getting into this all in this video. Stay tuned. At the very end, we're going to talk about the share count, how it's reflected on my pot stock valuation sheet, and how the value score, price to sales, market cap, how all those metrics change with the new numbers. So in theory, the numbers that just came out should make these metrics much cheaper, making ACB a huge buy. But I'm going to plug that in at the very end, let you know where it lines up with all the other companies in the industry. I'm just going to give you an example right now. If I just hit the value score that I made in the past, ACB is the third cheapest stock out there from my value score, which takes into account sales and growing capacity. So this already is a very cheap stock. Once I plug in those numbers, it's going to be great to see where it goes. But we're going to dive into the statements first, the assets, liabilities, the balance sheet. This is the bread and butter of where you should be seeing what money's being put where. So right now we have $4.8 million in assets. Last year around this time we had about 1.8 million. So this is a huge increase in total assets, and actually this is only June 30th, 2018. So this is a while back, but the assets are growing at a very impressive rate, and a lot of this is seen into the properties that they have, the manufacturing plants. That's where most of their money is with assets. So I don't see any big numbers I want to point out here. The only thing I want to point out is that their cash is very, very low. We have only $46 million in cash. That's probably why they have to raise debt to get that $375 million that they just raised recently. So they're going to have to keep doing that to pay the bills unless this cash increases or the revenue increases to a substantial amount each quarter. So right now, cash is very low. I'm not a fan of that. The previous year we had more cash than now. So unfortunately, that is supposed to be going up and it's not. And this company is taking on a lot of debt, so it needs to be safe with having cash on the side in case anything happens. And then we're going to slide into the revenue, the expenses. This is one sheet I pointed out in the previous live stream. We want to see what happened with the expenses, because with the legalization of Canada last 6 months ago, 4 months ago, there was a lot of expenses that went into it. We want to see if those expenses kind of fell off and they were kind of a one-timer. But first, I just want to point out gross revenue coming in at $62 million, and we have about $59 million for revenue from sales of goods. So the net revenue, if you take out the excise tax, that's going to be $54 million, and this was a big hit on all the numbers, gross margin, all the margins. This excise tax was just placed on the marijuana industry recently, and this is negatively affecting their gross margins and all their profit margins. So right now, this leaves us with $54 million at the end of everything. So after expenses and everything, it kind of changes, but just the raw net revenue is $54 million. This is on that middle range. So they expected the range to be 50 to 55 million Canadian dollars, and this is coming in at the higher end of that range. And that range was just lowered in the last couple months. So this 55 million number is kind of a low bar, and they just passed that pretty easily. And it should have been 65 million according to consensus and the estimates, the analysts. They all were expecting it to be in the 60s. So they dropped that and the stock dropped with it. And now we easily hit that revenue target. So that's good. That's a great reason for the stock to not sell off tomorrow. But with last year's revenue, we're up almost 300%, 380% according to some figures. So 11 million was brought in last year, and now we're bringing in 54. So this company is really, it's getting going. It's getting everything into production, manufacturing. It's moving very quickly. In 1 year, it almost 5x'd the revenue. And if we had to cost of sales that increased a bunch as well. That left us with 28 million. And then we take out some more things, we're left with 32. And then down here, expenses. The next thing I really wanted you to pay attention to, and I really want to point out, is that the expenses were not as much as the previous quarter. We came in with the total at being 112 million for expenses. So everything when you add it together. The previous year, it came in at 22 million. So expenses are increasing at a very rapid rate. There's still double what the net revenue is. In gross profit, it's about 4x that. So at the end of the day, we're losing $80 million. And if you factor in the losses from investments, and this is just because the whole marijuana industry tanked after legalization, this leaves them with unrealized losses of 119 million. So unfortunately, that totals us up with $279 million that we lost this quarter. So that is not my favorite number to look at. This company, although it's going to be increasing 2, 3, 4x in revenue, we can't see the losses increasing this much either. So last year, we were profitable almost $10 million, and now we're losing $280 million. So we're looking like an IPO. We're looking like a very early company just burning too much cash. And this is just how you obtain growth, but you need to do it safely. So half of this, I will say, is from unrealized gains. So we haven't really lost this money here in investments. So because we haven't sold it and we haven't realized those losses. So this number fluctuates every quarter because the industry is so volatile. So I wouldn't worry about this number. If you just head down here, we basically lost about $200 million. Actually, sorry, we basically lost, if you subtract the 119 out from here, we basically lost 100 and let's say 60 million. So that's not terrible, but again, that is something to kind of be worried about because you can't see them burning all this cash. And like I pointed out up here, we don't even have that much cash to burn. So what are they going to have to do if they keep burning cash? Well, they're going to have to take out money, take out loans, maybe put up some shares out there, so you're going to dilute the shareholders. So shares could pay for things. And in the end of the day, they just have to be financially solvent. And we don't want to see that number being any more negative than it is now. And we're just going to check out the next thing is the shares out there. We want to see if that increased from previously, and it did not. So great news, probably one of the best things I see in this financial statements, other than the huge increase in revenue, is that the balance for shares is exactly the same as previously. We're almost at 1 billion shares out there, and that has not increased from the last 3 months. So very good what they're doing to the shareholders. They're kind of putting that share count at a halt, and we're trying to keep it at a certain level. So that is a great thing for you guys and for anybody holding this stock. And the other things I want to point out are just the numbers, the raw numbers out there. So they sold about 1/5 of Canada's marijuana themselves as a company. So imagine that, 1/5, that's huge. And the other place I've found some useful information is their website. They actually have their financial statement. It's the same exact thing, but they break it down a lot nicer so you can actually understand the commentary behind it. And it's in the M&D, MDA, and this just talks about their patient base. This is where the highest margins are for medical cannabis. So they want to increase this number. It's not up huge from the last quarter, unfortunately, but this number is getting bigger, which means more margins for them, more money after sales. And this is their biggest focus. They don't want to just do wholesale cannabis. That's not the goal for them. And I've read this in the report. This is kind of what they're talking about. So the big thing is this number's going up. Then that's great for the company. And they also have Aurora Sky is supposed to be fully done right now, and that's going to increase production to 150 kilograms right now. So their production capacity is huge. And if we check out Q2, they increased the total number of kilograms of cannabis produced to 7.8 kilograms, 7.8 thousand kilograms. And from that, they sold about 5,000, and that was 1/5 of all the Canadian cannabis sales. It's pretty crazy. The cash to produce, the cost of growing and all that stuff increased to $1.92 per gram. This is up 47 cents from the previous quarter, and this is mainly due from the optimization of the Aurora Sky facility along with the excess tax and some other factors. So two of those things are going to hopefully go away. Hopefully the taxes get smaller, but the big thing is that they're not going to be spending money on their Aurora Sky facility. So that is going to decrease their cost per gram significantly. They're expecting that to be under $1 right here. Will be well below $1. And a lot of companies are already doing this, already getting under $1. So if they can drop this below $1, gross margins go up a ton, and this looks great for the stock. So they have plans to do this, and that's going to be huge. Their gross margin as well, obviously, if the cost went up, their gross margins went down. Their gross margin went down from 70 to 54. 70% gross margin is incredible. 54% is still insane. So just looking at these raw numbers from the financials, I think I'm very bullish on this stock just by seeing the growth that's actually happened, the gross margins, the facilities that are coming alive, and the capacity to get into different nations and get around the whole world. So a lot of bullish reasons to be in this stock. And again, small drops in cost and gross margins, but I don't think it's going to last. And they don't expect that to last either. And I'm not going to go into depth with everything. We have acquisitions, we have money, debt, all that stuff that happened. And the one thing I do want to talk about is that they did get into a lot of different countries, 23 to be exact. They got 23 countries to be able to distribute marijuana to in the last 3 months. So that is the 150,000 kilograms of cannabis. They're going to go out to those countries very quickly, and they're going to start developing a market out there. So very exciting stuff happening with their international exposures. So the last thing I'm going to do is I'm just going to pump in those numbers, see where it changes us on our valuations for this industry company and everything. So we're going to add 50,000 kilograms for current growing capacity. So this is going to be fully done in March. I'm just going to go ahead and throw it in, and it's actually going to not totally change those numbers, but the revenue, I'm going to add about 30 million because that's the difference from Q4 or Q2 last year, Q2 this year, 30 million. And then that's going to drop us to 17. So we are getting almost as cheap as CanTrust Holdings, which is obviously one of my favorite stocks. I talk about it all the time. But again, the growing capacity did not increase that much. It did not change the value score that dramatically. And the next metric on a checkout is price to sales. We're finally under 100, which is great because 100 is kind of that line where I think it's a little bit too expensive. And at this point, we're moderately expensive. If we look at it, it's in the yellows. Cron is at 346, and we got Hexo at 101. So ACB is at 88. This is relatively cheap in my opinion. It's right in that middle zone. And then we're going to check out market cap to growing cap. So this is basically how expensive or how much are you paying or how much is the industry paying for this company's growing capacity. So right now, this is relatively expensive, but I do have it priced for the current growing capacity. If we look at the future, this drops us down to 14, and I'd have to change them all. But it does, if you factor in the current or the future, what you're paying for that, it does change that metric. So 14 would put us very, very in that cheaper zone, almost at the bottom down there with Hexo and Ephria. So again, this sheet's free for you. It's in the bio. Fill out that link and you'll get it emailed to you instantly. And please hit that subscribe button. I would greatly appreciate having you as a subscriber because I'm following this industry day to day and I'm here for you every day. So Market Moves signing off. Peace.